Hi, Katie.
Hi, Dale. How you doing?
What's the guy's name? Paroshnoff or the Wagner guy. So, welcome back, Katie. I guess my first question to you is, are you a believer that we're in a new bull market because it took out the 42 level that I know you considered a very important pivot?
Yeah, I would say a bull market for an intermediate term time frame, but not necessarily, a long-term bull market like we'd all welcome. I think the breakouts that we saw, which in our work occurred in May,
Right.
related to the cloud model, so the weekly cloud model
Oh,
on
do
it.
you want to share, Katie?
I can, yeah, sure.
Okay, let me stop and love to look at your charts.
See if I can get
And
this to work here. Okay.
all right.
And can you see that?
Yeah, got it.
Okay.
Got
Here's
it.
our weekly SPX bar chart. And you can see in May, it cleared the upper boundary of the cloud. We always wait for
Yeah,
2 weekly closes above. So this
right.
became our breakout. And when you see a breakout that gets this immediate upside follow through, that tends to be a positive. So we've been more constructive as of May from an intermediate term perspective. But we just don't have the affirmation on the monthly bars that we've seen a lasting turnaround here. And in fact, when you look at the same model, the cloud model on the monthly bar chart, you'll see that it goes from what was a secular bull trend for many years to but this sort of prolonged phase where it's flattened out. This is 2024 and 2025. So to
Yes.
us, it gives you that visual indication that perhaps we've already moved into this big, wide trading range, which
Okay.
is pretty much the max frustration, I think, for investors, unfortunately.
Yeah.
But
For traders. Yeah.
yeah, yeah.
Well, I think that what happened in the last few days is significant for at least a correction to potentially revisit where everyone turned constructive at 4,200. Are you getting any DeMark short-term sells that were overdone? I know that sentiment and put call ratios and even breadth with the recent rallies we've had has not improved.
Yeah. So
And
we
I
had
still
breath.
think the banks are in trouble, don't you, Katie?
Well, we actually wrote up banks as it pertains to KRE, the regional bank
Yeah.
ETF, this morning in our note. And we addressed it because they are now short term oversold. So with this
Okay.
pullback, this is daily SPX again. You can
Okay.
see that you saw the cloud breakout point. This is former resistance from February that you see here.
Right.
This is your initial support between the 50-day moving average at 4205 and this former resistance level. I don't even think we're going to see the pullback get back to that support before
Okay.
we see a resumption higher. The breakout in May yielded an upside objective of about 45.10, and that was based on a measured move projection. So essentially
I see that.
assuming, yeah, that the uptrend would maintain its trajectory.
Yeah.
And there's also a Fibonacci retracement level around 45.05. So we do think we'll get to that zone before a more significant pullback. But in terms of the sort of very, very near term, we don't have any DeMark exhaustive signals yet on the downside on a broad basis. We're starting to see some of those nines pop up. That means TD setup 9 buy signals here and there. And those are indications that short-term oversold conditions will then give way to a resumption higher. What we'll also be watching very closely are these stochastics. It's a 12-period slow stochastic. And it's when you get the cross back up that you tend to have a good entry point. So that's what we'll be looking for from the major indices, but also from the mega caps. The mega caps have had a proper pullback here as well. Google or Alphabet is the first one to become oversold from a short-term perspective. And so we'll see a little more downside today. Google will come into the cloud and perhaps the 50-day pretty soon here, it looks like. And once we have this turn up more decisively, then we'll feel like we have a re-entry point here. So that's
What
our
would change
short-term
your
mindset.
mind, Katie? What would change your mindset that we're going to head towards 4505? Would it be closing under 4,200? Would that do it for you,
You know,
where you
I
become
think,
cautious?
yeah, I
Or
think
there's nothing that could make you cautious?
oh no, there's always something that
Okay, okay.
is cautious, especially in this environment. Listen, we're
I-
very non-committal these days, um, but
well, you
but
recently got married, so you can't say that about yourself.
this is true.
All right.
So if you look at the weekly MACD here, it's been diverging on the SPX chart. So I think we would probably see a little bit more of a downtick here in the weekly MACD, and or perhaps something from the DeMark indicators on the weekly chart as well. Notice this perfect sell signal for those that know DeMark.
Yeah.
From the weekly TD sequential model back there. One of the reasons we got less constructive in early 2022. So if we saw anything, deteriorate on the weeklies, I think we'd be more skeptical. And to your point on market breadth, we did see the cumulative advanced decline line get through the cloud-based resistance of its own. And again, there we like to see the weekly closes, 2 weekly closes above, and we got that. So it's telling us that this breadth pullback. So here's our breadth breakout. And the pullback should actually hold up here very short term, and we'll get another push higher in terms of market breadth. And you can see how that just basically affirms what we've seen from the major indices. What's interesting to me is what that breadth push initially did for the Russell 2000 index and also the equal weighted RSP index or ETF for the S&P 500. We had these breakouts from the ranges that had been so persistent. So here's the Russell 2000 on the daily. You see this consolidation breakout above the 200-day moving average and the cloud. And now within days, I would expect that we have a nice short-term oversold buy signal above that former resistance.
Looks like AMD, the way AMD gave it up. Similar chart.
And it's pretty common to have seen a good retracement in the tech stocks that had exhibited leadership, and we welcome that. It's always hard because the market psychology, I don't think has fully embraced the uptrend yet. But if you look at AMD just for one, you can see on the DeMark work, it's probably 2 days away from one of those 9 buy signals. So your breakout point is kind of coming in line here. Right.
Yeah.
You had the 50-day moving average and a couple of days away from a DeMark signal. So we're getting to that place where maybe even later this week, we'll start to see those signals pop up.
I think that's a foreshadowing, that gap fill on AMD is a foreshadowing of Microsoft doing the same.
It's certainly possible.
And then NVIDIA.
Yeah, we saw Microsoft.
Oh, how could NVIDIA come down and fill a gap? It's, it's the new God. How could it ever do that?
Oracle is kind of a sleeper. Nobody's talking about it, but it looks very similar. With the gaps up that we've seen in some of these large cap tech names, Microsoft and NVIDIA included, usually what we worry about is when you see the gaps up here or here, that's in Microsoft. If you see them closed or dipped into very quickly, that becomes an issue. But if like we've seen this nice follow through without it being breached, that can actually sustain it for a longer duration. So we're not terribly concerned about those gaps being filled here.
Okay. All right. Where are you at on yields?
Well, we believe that the corrective phase within the broader long-term uptrend still has a hold. There's a downtrend line on the 10-year yields around 390.
Right. It's that descending triangle.
That's exactly right. You can see it.
Okay.
Probably best on the weekly chart. And here, right. So here's your downtrend line effectively. Notice that the cloud still does point higher, albeit certainly a lesser trajectory. So we're looking for a move back into sort of the 3.25 range before we see a resumption higher. And you can see the strength of this support just going back to the high from 2018, tested successfully here, ultimately meets up with the cloud in September. So that's our sort of mental threshold there for 10-year yields before they resume that long-term uptrend. And with that, we actually have an TLT for one. Some of these treasury bond proxies have signs of downside exhaustion in the DeMark work that have several weeks of implications. So with the pullback into the May low for TLT, we had this nice sort of well, here, let me show you on the TD sequential model, a nice 13 buy signal generated at that low. And now we have a subsequent MACD recovery. So that tells us that we should see some upside follow through from treasury bonds here for the coming weeks. And then
I don't you think that could be sparked by risk off and flight to quality being like, the way it used to work, because it was broken, and that people actually go to bonds if there's
it's a
risk off event?
possibility that the trading range that has had a hold there on bonds. I mean, it really just shows like a period of indecisiveness, right?
Well, that's an ascending triangle, TLT, right? Flat top at 109.
Yeah, it does have that sort of resistance area that we're going to assume the resistance will remain intact until it proves otherwise.
Right.
But we trust that at least for now we have upside, and I'm not terribly convinced it's a wholly risk off tape to generate more upside there. We obviously have a more bullish bias on things that have established uptrends, and that includes, of course, the NASDAQ 100 index. So even with this several day pullback, the intermediate term momentum is pretty healthy there. Where it's not that healthy, and I think you were talking about this earlier, is for gold. We've seen gold not just pull back like we're seeing in equities, but like a proper corrective phase here for several weeks. This is on the weekly chart. And with that, you have deterioration in intermediate term momentum. We don't think there's a whole lot of downside risk for gold in here, but clearly it's out of favor. If we were to see some level of reaction to the oversold condition that was just logged this week, then we'd start to talk perhaps about more risk off positioning, but that could take several weeks.
How about the dollar, Katie?
The dollar has also been range bound, and that creates some frustration there too. Within the range, our indicators do point lower, but I would say it could just sort of be more middling or backing and filling in this range because they are somewhat mixed. So if you reconcile this, these are daily charts here, and these are weeklies. You have a short-term oversold upturn, but an intermediate term downturn. Here you have neutral short-term momentum, improved intermediate term. So you really have mixed takeaways here overall from our indicators. And that probably means that we'll see the dollar remain range bound for now. The support's pretty well defined just at the lows from this year. And below that, we'd start talking about sort of 99 again. 99.10 is actually a level for it on the Fibonacci's, if I recall. So that's, but I don't think that's a near term, thought unless we were to see that support challenged.
Okay. And there's been a lot of talk about uranium and related equity issues in uranium. Have they come up on your screen?
So I use, I'm not sure what you use if you go directly to the commodity, but I like this URA, which is an ETF representing uranium. And here too, we have a trading range. And within that range, there does seem to be room for a deeper pullback. So the weekly stochastics being a great tool within ranges. You can see this downturn. So I would probably hold off on new additions here, but look to add exposure into additional weakness. Just noting that the intermediate term momentum has certainly improved to some degree. And you actually have, even on the monthly chart, an upturn in the stochastics that I think is somewhat compelling. So would look to add exposure into weakness there.
I know last time you were long oil shares. Has that shifted, or is that the same?
It has shifted. We kicked out the energy sector spider, or XLE, from our own ETF. And the reason for that really, stems from our model, of course, but the model is largely driven by long-term momentum. And if you look at any long-term momentum gauges on the monthly bar charts for the energy complex, you'll see a pretty distinct loss of upside momentum, not completely surprising after the preceding 2 years of outperformance. So that all said, there are some signs of downside exhaustion in crude oil. So we're watching 13 buy signals on the DeMark indicators. You see the daily has one, not a high conviction one because it's more range bound, but then also the weekly has one. You see the 13 here. Here's the last sell signal. So we're seeing some stabilization there. And then there's even a 9 that's still somewhat active on the monthly. So we kind of feel like there's a floor for crude oil in here. And with that, it does allow for the energy stocks to bounce when the market's strong. And yet we're more inclined to use any strength, any bounces in energy to reduce exposure, just given that loss of long-term momentum.
Okay. Favorite sector? That you're overweight. Tech.
Yeah, so in
Qs.
our ETF or TAC, we have both communication services via XLC and also technology via XLK. And it's those two sectors alongside also the consumer discretionary sector, which could be, I guess, achieved via XLY. Those are the sectors that do tend to exhibit upside leadership and stronger tapes. So, for those that think that it should be a stronger tape here for the next couple months, like we do, we feel these are the best sectors. You can see the relative performance. Intermediate term is quite good for these sectors. You also saw the ratio of consumer discretionary to consumer staples act very well. And that actually would say that we still have some risk on here. So those are our preferred sectors for now, but we would expect that to change in Q4. We are, as mentioned, not committed to this rally. We do think that because the market could be in this long-term trading range, that once we get any loss of intermediate term momentum, we do want to respect that. And we could see a very quick move back to more defensive areas of the market, back to more of a risk off stance. So we'll just have to kind of be dynamic in our positioning.
Can you explain to me why the utilities are so weak with yields, softening over the last several weeks?
Yeah,
It's not an interest rate play anymore in the utilities, is it?
Yeah, and you could argue the same really about REITs. We've seen all defensive, or sectors perceived as defensive under pressure here.
Okay.
That includes real estate and to certain segments, of course, of healthcare, like pharma for one. And I think it's more of just a risk on tape and sort of that mega cap complex, just detracting people from everything else in the marketplace. It just seems to be those are the new safe havens, right? So and with the people gravitating towards those, they're not inclined to go for utilities or REITs or pharma in an environment in which the mega caps are working still. So I just think it's just sort of a sector rotation in part, but also folks just really rewarding these mega cap stocks. I do think there's redeeming qualities in some of them. XLU, for one that you see on the screen, there's no new buy signal, but certainly has good support. And if you can find a high yielding stock that has it, at least good support and range band, it still is worth considering exposure, in my opinion.
Okay, BTG, I know you hate golds, but it's a 4% yielder.
Is that right? Yeah. And I mean, we want to find ones that are yielding ideally more than treasuries, right? So, I mean, there's some, I think, REITs out there that you can get 14% out of.
Wow.
Yeah. So we would reward that kind of setup. This BTG that you cite has a DeMark buy signal on the TD combo, and then it has a 9 on the weekly. So maybe now's a good time.
Yeah. I bought some I think Friday. So Katie, my takeaway is you feel that 4,500 has destiny, and that any pullback looks like a pullback to buy. For now, avoid gold. You think really rates are just range bound. You can see, like, if you look at the chart of like they're opposite, TLT and the 10-year yield. If we take out 360, I think 330 is a gimme, but I think we could take out 330 and trade under 3. Do you see that as viable?
On 10-year yields you're talking about?
Yeah. And that would give us like a 120, 116 to 120 TLT.
I would say that if 3.25 is taken out, That would
Yeah.
look more likely. I'm
All right.
working under the assumption, and I always work under this assumption that the prevailing trend will resume until we
Right.
see a major impact in terms of momentum. So so far we don't have that, and my assumption is that 3.25 will hold on the next
Okay.
downdraft. But
Okay.
of course, if we did see a breach, then the next support that we'd be watching would be based on the cloud. So if, for example, we breached, this support in here,
Yeah.
the cloud shows pretty well
3.
defined support at 3%.
Yeah.
And,
Okay.
and beyond that, in terms of additional
And
levels,
then we shoot up to new highs into year end as
well,
the Fed has to reassert itself because of sticky inflation. I don't know. I just think that the move in rates is going to be a risk off move. Have you noticed anything between junk, the credit spreads? They still look tame to you, or is there any sign that there might be something going on there?
it looks tame to me. And what I noticed this morning on the yield curve, we have a DeMark buy signal. Not to say that that's completely meaningful. It's simply saying that there's room for a relief rally. But I thought it was somewhat fascinating here. If you look at the 2s, 10s, here's this confirmed as of yesterday DeMark signal supporting a rebound here near term.
I put out a tweet and I said this was a demarcation line, and then I said not a demarcation line.
Yeah, there you go.
So
And notice there is a on the monthly, which has been actually pretty timely. There's a 12 towards a 13. And if you look at the past 13s, they have given way to sustained up moves.
yeah, great stuff, Katie,
Of course,
like
Dale.
usual. So cannabis stabilized, but just sideways.
It's funny. I think we publish close to 6 or 7 reports now, every day, every week. And we had a report published solely on cannabis stocks, and it's the only report that we have walked away from in our research.
Yeah,
And
it's so boring.
well, we just
And
didn't get any traction, quite frankly. So,
they
for
needed
good
that
reason.
legislation that we couldn't get done. They need the
That's
Safe Bank
true.
Act.
They needed more than a technical catalyst. They needed
Yeah.
something more regulatory. And we said, well, maybe if we discontinue this report, we'll bottom ticket. But that hasn't been the case.
All right, so the contrarian indicator is when you stop writing about something.
That's
Well,
right.
you know what? We will not stop talking together because every time I learn something, want to thank you,
Of
Katie,
course,
for coming here and edifying the community. And best way for people to follow you, would it be Twitter at Stockton Katie, or how about your website address?
the
And
website's probably best because everyone can sign up for a free trial on the website and receive
okay,
all of our research for a month with no obligation. So that's a great way to stay in touch with us as well. We do teach-ins and things of that nature.
okay, and the address, please.
www.fairleadstrategies.com.
Thank you so much, Katie. Have a great, oh, we're in summer now.
I
Have a
know.
great summer
Thank you.
season in the market, and we'll be talking in the fall.
You too. Sounds good,
Really,
Dale.
all right. Katie
Take care.
Stockton, everybody. And you could follow her at Stockton Katie and go to her website at fairleadstrategies.com. Check out her ETF. That's kind of a way of just having Katie a portion of your capital with Katie's influence on what's in it. So something to consider. And that's a wrap. You could join the team in 19 minutes on the Morning Edge. Don't just count your pips, count your blessings. Good hunting, everybody. Thank you again, Katie.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.